I normally go live on Thursdays at 7 a.m., but heck, it's the holidays and all of my guests' calendars are all messed up. But hey, I still want to bring you the daily financial news like I do 5 days a week. Let's talk about the 10-year note. The 10-year note is racing again. Again, as you've heard me say for months now, this is just kind of more of the same. Again, if you are in the real estate business, please write offers that cash flow day one, disrespectful follow-up. Buyers are going to be pulling back, which means investors have an opportunity to create some great deals. I do think 2025, when we look back on it in about a year, will go down as a pretty amazing year for our community. Because again, we are not in a rush. We don't do bad deals. We don't bet on appreciation. We're willing and expected to do the work. We're willing to follow up. And everything we do cash flows day one. It's hard to go wrong when you do all of that. And as rates stay higher for longer, more on that in a minute, we're going to see demand continually pulled back. And folks, motivated sellers, I think, are going to get increasingly easy to find. Now, at the moment, I'm only willing to talk about a buyer's market kind of through the summer, kind of call it May or June. I think looking past the summer is just too long. There are too many variables with the new administration. Will tariffs be a scalpel or a sledgehammer? Will immigration be a scalpel or a sledgehammer? Who knows, right? We've got a lot of things going on that could bring inflation back. We have several things coming that could be deflationary. But for you, with the buy box and the daily discipline, I want to encourage you. No, I want to beg you, please write disrespectful offers. 20, 25, 30% below list price. Now, again, don't write these on first day listings or 7 days old. Let's not be stupid. But let's do the work. Let's communicate with agents why we are doing that. Let's tell them the story. And let's just go get some amazing life-changing deals. And then as we get to the end of the year, I fully expect for those of you that are shopping for 5 to 50 units like I am, we're going to start to see some pain. Because again, I think we saw a lot of commercial borrowers of multifamily very hopeful that rates would be in the 5s. And they're not in the 5s, and dare I say, they're in the 7s. So that is just going to blow up a lot of deals. There's a lot of people hanging on by their fingernails. And, again, as I've always said, where there is great pain, there is great opportunity. And if you've been following this channel, you know we've been waiting for this. We did not participate in the syndication, the bridge debt, the IO. You've heard me say it many times that stuff is risky. As an accredited investor, I brought you many of these deals and told you how stupid they were. But you know what? Time to pay the piper, and we're going to have some interesting opportunities. So again, the 10-year note's up big. It broke 4.6, now 4.63 last time I checked. Remember, we are watching the 4.7 level for resistance. We got this from Dan Bird. And then the mega resistance is 5%. So we're going to be watching that 4.7 first and then 5. Weekly unemployment claims, better than expected. Again, folks, we had that 1 week, 3 weeks ago, where we popped to 242 or 244. That was noise. We're now back at 219,000. Again, this is the weekly drumbeat that I follow. I only get concerned when we break 250, and then it gets really problematic over 300. I think we've only had 1 week over 250 all year, and I think it was 252 probably 4 or 5 months ago. We've definitely been basing at the kind of 220 level. So again, something else to watch is continuing claims, right? Again, my fear for 2025 is the unemployment rate may not rise spectacularly, but we're going to see the duration of unemployment increase meaningfully. So the weekly unemployment claims may stay low, but watch durations. I think I checked this morning. I think it was 1.9 million on continuing claims. I think if that got to 2.9 or over 3 million, that would be a problem. I do want to shout out Frank, old guy REI. He actually did an accountability group on Christmas. That is commitment. That is caring about the community. You know, Frank does an accountability group on Wednesdays. Christmas fell on Wednesday, and he still did the accountability group. I could not imagine. That is just so heartwarming that the commitment was made, and it was led. The 26th one on Christmas ran over 2 hours. Folks, we have 5 accountability groups in school. You want to be around these people. You want to network with these people. Again, we have learned time and time again, you are the average of the 5 people you are around. Some of you need to get around some real estate investors, and I am providing you that platform with school. We just went over 350 folks, on the way to 400. So time to join. What do we got next? Oh, chief economist at Fanny May, Mark. I'm going to call him Palin. These are what Mark is calling chief economist at Fannie Mae. Mortgage rates to decline, but stay above 6%. Yeah, I don't know. New home sales to drive activity. I agree with that 100%. I think when we look at sales next year, we're going to see a disproportionate new home sales. Why? Because builders have this thing called margin, and they could bake in interest rate reductions and things of that nature. Also, if they were smart, they would be building smaller homes, thus driving entry-level housing. Home prices will increase, but slower. Again, I think that is a call I share. This was an interesting one, and this is like the only way to fix housing, in my opinion. Well, it's obviously it's not the only way. It's just the way we are going to fix housing. Let me say it that way. It will be the way housing is fixed, and why it is so painfully slow. Nominal wage growth to exceed home price growth. That's how this works out. That's why it's going to take 5 to 10 years to unmess up the broken housing market. It is just going to take that long. I read an article from Bankrate. I hadn't read this before, so I thought I would share it with you. According to Bankrate, a $30,000 HELOC, home equity line of credit, interest rate is 8.43%. I was actually shocked by that. I thought rates, HELOC would be higher. Again, this is according to Bankrate. No idea. Go check with your lenders. But yes, Ned Davis Research has declared the housing bear market over. I actually tweeted this out this morning, told Ned that he's a little early, buddy. He should have waited for validation. What did Ned see that caused him to call the 39-month bear market over? He saw the total home sales, existing plus new, increase year on year. Now, I think it was a mistake. I think it was one of those blips. If you guys remember, in November, we had the early part of November where interest rates were in the low 6s. And as I've said for more than a year now, 6%, anything with a 5 on it, right? You buy down in the 5s, you are going to see demand fly back. And I think what Ned did is he didn't understand that moment in time is over, and that we are very likely to see year-on-year dips in total home sales, thus continuing the bear market. 1 point never makes a trend. You should at least wait for a follow-on month, in this case, to validate that. So again, we'll see what happens next month, but I did tweet out that I thought Ned Davis Research was a little early. We got some housing markets, according to Lawrence Yun, chief economist of National Association of Realtors. Lawrence Yun says the worst is over. Affordability to get better and inventory to increase. Again, sorry to disagree with such a prominent chief economist, but I think you are a year early. Folks, go back and study history. It takes 4 years to find the transaction bottom. We've also seen rates go up 100 basis points since the Fed started cutting. Yes, folks, the Fed has cut 100 basis points and mortgage rates have gone up 100 basis points. That does not make it easier to do transactions. So again, I think like Ned, Lawrence Yun is a year early. I do think 26 will be better than 25, but you got to get to the bottom before you can climb out. We got some expected housing markets to turn into buyers markets. I thought that was interesting. I've actually heard most of these markets are sellers markets. But according to a Yahoo article, in 2025, this is going to flip from sellers to buyers markets. It was actually a list of the top 10. I only took the top 5. We got Boston, Massachusetts, Charlotte, North Carolina, Grand Rapids, Michigan, Greenville, South Carolina, and Hartford, Connecticut made the list. I don't know. The Northeast seems very scarce of supply. Would love to see it. Don't get me wrong. Love to see more supply. Love to see that buyer's market come, but we shall see. The White House, yes, folks, the White House and the Federal Reserve have warned us that shelter inflation is going to continue for next year. This was actually pretty interesting because, as I've shared with you in years past, I thought the shelter inflation would roll off much, much faster. But given the outdated and the horrifically inaccurate way we calculate shelter inflation, we are going to see shelter inflation stay artificially and, dare I say, inaccurately high for another year. Think about that. You're misreporting shelter inflation knowingly for another year. How stupid is that? Shelter inflation did peak at 8.3%. Today it's being reported at 4.8%, but you and I know when we look at apartment.com and other measures on rent, it's actually flat to down in apartments. So again, if you don't recall, shelter inflation makes up 30% of CPI. So if you're reporting something at 5 that is really 0, you're an idiot. And if you know you're doing it, you're really an idiot. But according to the White House and the Federal Reserve, get ready for another year of being idiots. I just don't get it. Folks, we are 50 days away from our Vegas event. I know a lot of you have been wanting to buy your tickets. It is time. The days are ticking by quicker and quicker. I know because I'm spending more and more money buying things for the event. Do yourself a favor, get the tickets, get the airfare, get the hotels. Feel free to stay at any hotel or casino that you like. We are off strip. You will take an Uber or rent a car to get there. And time to buy your tickets. Come to the event, ask questions, network, real people. It will be fun. Dave Ramsey said, and I quote, "There is nothing wrong with owning rentals, but forget get-rich schemes." Dave Ramsey, you are 100% right again. Again, I was lucky enough to see Dave Ramsey speak, I don't know, about 9 months ago. So I loved his story. Again, he just stays on message. He's really said the same thing for the last 3 decades, and I appreciate that. Again, folks, you got Dave Ramsey's permission. Nothing wrong with owning rentals, but forget the get-rich-quick schemes. Last thing we'll talk about is I just saw that the big banks are suing the Federal Reserve. This ought to be a fun thing. They're actually suing them over their annual stress tests. Apparently, the stress tests fail short of the intended goals and actually create unintended consequences. And the biggest banks have had enough. And then lastly, folks, as a little kudo to joining school, I do want to let you know on Monday, you are going to have the opportunity to interact with Brian Adamson. Brian Adamson and I have been going through some Bible verses and tying them together with today's economy. Brian and I will be doing that live inside school. You can join, you can listen, you can participate, ask questions, bring your favorite, whatever you want to do. It's on the calendar. The link is there. You will be reminded ahead of time. Again, I like to try to find one millionaire a week to go in school, and then I go live once a month, plus all the education and networking and the like. So join school, buy your tickets to Vegas. It is time. Take care. Have an amazing day. Later.